Good evening everyone and welcome to our first ever YouTube video. Today we're going to be going into support and resistance levels, some really basic yet solid foundations of technical analysis. And in my opinion, a really important lesson if you're starting your trading journey or if you're sort of an intermediate and you want to brush up on your technical analysis skills. Support and resistance levels are the foundations for that. Now tonight I'm on the website TradingView. This is where I do all of my analysis. I find it very straightforward and a lot cleaner and easier to use than a lot of other softwares out there. Now on TradingView you have access to loads of tools, trendline tools, boxes, circles, rectangles, whatever you fancy. Fibonacci retracements, all of this stuff down the side, which we can get into in a later video. But for today, we're only going to be using a couple of the tools which we'll delve into later. So anyway, back to what we were initially talking about, and that is support and resistance zones. How to identify these zones and how to take trades based off finding these levels on the charts. So if you're new to your charts and you're new to technical analysis and new to trading, this is the first thing you should be looking for when trying to find a trade. So what you want to do is hop onto the hourly time frame, or you could choose the 4-hour time frame or any other time frame you like. But me personally, I do the majority of my analysis on the 1-hour time frame. So each of these candlesticks represent 1 hour's worth of price movement. Expand the charts out so you've got a nice clear picture of what price is doing, and you can just see things a lot easier when the charts have been expanded out like this. So what a support and resistance level is essentially a floor and a ceiling. So a support level being a floor and a resistance level being a ceiling. So you want to find an area on the chart that price seems to be getting stuck at. So we can almost identify straight away that this area in particular is acting as a ceiling for price. Price has come up into this zone many a time and rejected it. The next time it came up into this region, price rejected it, and then again and again and again. So we can clearly identify this as being a resistance level. So what we'll do is we'll take the rectangle tool from the sidebar on the left, we'll start it from the first high point, and we'll click and we'll drag across the next highs to create this ceiling. And obviously you can then adjust it higher or lower, but we want to try and encapsulate as many of these high points as possible so we've got the most accurate and reliable ceiling in place. So we can now see that this represents the ceiling level quite nicely. We have the start of the ceiling here, we then almost have the second touch, third touch, fourth touch and fifth touch. Now we can do exactly the same with the floor. We can find out if there is a bit of a sticking point, and we can quite clearly see that this area in particular has been a bit of a sticking point for price. So again, we'll take the rectangle tool, we'll start it from the start of this floor region, we'll click it and we'll expand it across something like this. So we've got a pretty precise floor region right now, so do it like that. And there we have it. We have our ceiling and we have our floor, which price has pretty much been bouncing from the floor to the ceiling, to the ceiling, to the floor, to the ceiling, to the floor. So what we could possibly expect from price is a similar kind of path, which is price has already taken. So maybe back up to the ceiling once again, back down to the floor, back up to the ceiling, back to the floor. Something like that in that kind of fashion. Now, if I play the charts, I can show you exactly how price reacted to this ceiling level, where you take your trade from, and how you would figure out your risk, your stop loss, and your take profit. So we've identified the ceiling, we've identified the floor. The next thing we need to identify is where we want to enter our trade. So we can see that price is nearing this ceiling level, and we know that we want to be taking a trade roughly within this kind of rectangle region. So as price approaches this region, we'll be looking to enter somewhere around this point here. So if I play the charts out, and we can see exactly how price went. So there we have it. So price eventually did meet this rectangle ceiling region, and what we can see, price rejected this region as within the hour price had pushed up, and before the hour closed price was then forced back down. The next hour opened, 9 o'clock to be precise, on the 18th of Feb, and what happened was price started to come down. So this would have been our indication that price is rejecting this ceiling once again. We shall enter this trade and hope that price continues to fall. So we'll be looking to start selling the currency pair AUD JPY. So we may have entered a bit sooner than this red candlestick. We may have entered around this box here because we've seen price push up to the top of the ceiling. We've seen it been forced down. That's our clear sign that price is rejecting this zone, and we'd enter roughly around here. So the next thing you want to do is come onto your sidebar. You want to hover over this on the left and click short position, which is another word for basically selling. So we click where we would want to enter. So let's assume we wanted to enter right there, and it gives us two boxes. Obviously the one below is where we'd set our take profit, and the one above is where we'd set our stop loss. So you can drag these to wherever you'd want to place your stop loss or take profit. So let's focus on the stop loss first. We'd aim to place our stop loss just above this ceiling region to give price enough room to breathe. Price can come up to the top of this rectangle like it has done before and still reject. So we'll place our stop loss just a little bit above the ceiling region, and we'll put our take profit. You could put it right down at the bottom of the floor here, or you could be a little less ambitious and maybe put it part way. So let's just set it just above the previous floor region down here, as that's where we're hoping price to reach next. So now we've got a good visual representation of our loss and our profit potential. So this is when we figure out how much risk we'd like to take on the trade and use all these figures to input into our MetaTrader 4 to take a trade. So we'd hover over this box and we can see a few numbers and percentages come up at the top here. What you want to focus on is this number in the middle, 27.2. This is the amount of pips or digits your stop loss is away from the price you're entering at. So we can see that from where we have entered, our stop loss is 27.2 digits or pips away. So this is the second part of what you would then do. You would then go onto the website Baby Pips Position Size Calculator, and you'll be brought to this screen here where you can type in your account currency, which in our case is GBP, or if obviously you're over in the States, it'd be USD, or if you're in Europe, it'd be Euros. Type your account balance in. So for the sake of this example, we'll say £300. So we'll type that in there. We'll say what risk percentage do we want to take out of that 300. So 10% being £30, 5% risk being 15. So let's go with 5%. So 5% risk, we want to risk £15 of our £300 balance. And it says stop loss in pips. So if we go back onto TradingView, we identify that our stop loss is 27.2 pips away from where we are entering the trade. So we'll go back onto Baby Pips Position Size Calculator. We will type in 27.2 pips, and the currency pair we are trading was AUD JPY. So we'll scroll down this list and find AUD JPY. And then it asks us underneath, what is the current GBP JPY ask price? So we'll go back onto TradingView and we'll find GBP JPY. So we can see the price of GBP JPY currently is 156.316. So back onto Baby Pips, 156.316. And then we'll click calculate. And this figure under standard lots is the lot size or the decimal that you'd be entering at the top of your MetaTrader before placing your buy or sell trade. And in this case, we're obviously doing a sell trade. So we'll come back onto here. We've identified that our stop loss is set at 83.442. Our take profit is set at 82.560, as that's where the bottom and the top of our box where it shows the stop loss and take profit. So you'd enter this into 83.442 into stop loss. You would enter 82.560 into your take profit, and then you would enter 0.08 into your lot size at the very, very top of MetaTrader, where you input how much risk you want to take. And we have figured out that that is worth £15 worth of risk if the trade goes the opposite way. So if we get rid of this, we'll see how the trade went. So if we click play, we can see that slowly but surely price started to fall down in the desired direction back towards this level of support right here. And we would have reached our take profit and you would have made profit. The trade would have closed automatically and profit added back to your balance. Now, we're back at this level of support. Now this is another opportunity to take a trade. So similar to what we have just done with the resistance ceiling, we're now basically going to flip everything on its head, flip it all over and trade from the floor. So instead of selling from the ceiling to make profit as price falls, we're now going to look to buy from this floor as price rises, because we've seen that once, twice, 3 times before, every time price has been into this floor region, price has then rose back to the ceiling. The next time price comes into the floor region, price then rises back to the ceiling, and so on and so forth. So what we're expecting to see is obviously a very, very similar thing occur again. We're hoping to see price slowly but surely make its way back to the ceiling. So naturally we're going to be looking to buy from this zone. So what we'd do again, we'd find our, this time, long position, which basically signifies buying. We would click where we want to enter, so let's assume if price dipped a little bit lower, we'd want to enter from around here. We'd again set our stop loss just outside of this support floor, give the trade enough room to breathe. Price could come down to the bottom of this rectangle like it has before and still reverse. So we'll set our stop loss confidently just below this level of support. And then again with our take profit, we'd like to think price will rise all the way back to the ceiling. But to be a little less ambitious, we'll set that maybe 3/4 of the way to be happy with profit if price reaches this point here. So these are the figures that you'd input into your MetaTrader, your stop loss being 82.234, as that's in line with the bottom of where we wanted to set our stop loss, and then the same again with our take profit, 82.977. Again, we'd come back onto baby pips, we'd figure out all of this again, so our account balance, £300, what risk percentage would we like to take. For this example, let's say we wanted to take 10% risk, we wanted to risk £30 of our balance. We then need to type in what the stop loss is in pips, which if we hover over this, it gives us, so it's 18.2 pips away from the price we're entering on this occasion. So we'll come back on here, 18.2 pips. The currency pair we're trading is AUD/JPY, and we already have the current price of GBP/JPY filled in from last time. So we'll click calculate, and this number right here is exactly what you want to be entering into the top of your screen at MetaTrader on the page where you're clicking sell or buy. And in this case, we're clicking buy. So you'd set 0.25 at the decimal at the top. You'd fill in your stop loss, which is 82.234, and your take profit, 82.977, and then you would click buy and execute the trade as the price comes into your desired buying zone. So if we click play, we can see exactly how price played out, and it pushed up initially, it soon pushed right back down into our support floor, but we know, as price has showed us previously, price can push as low down into this floor as it likes. It has reversed before, so history shows that as long as price stays within this box zone, it will likely reverse again, which it has done. And if we continue playing this out, we can see that price continued rising all the way back to the resistance ceiling, and we would have had another take profit on our hands up here and another profitable trade made. So I hope that makes sense in regards to support and resistance levels, how to identify these levels, and how to make trades step by step based on these levels. What I'd recommend is going away, going through many different currencies and trying to spot these areas of support and resistance for yourself. Please send me examples of your support and resistance zones, and I can give you feedback on these zones and help start getting you spotting your own trades to take in the market. Hope you enjoyed the first video, guys. There'll be plenty more to come, and I look forward to trading with you all tomorrow.